a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, I'm Neena Mishra. Welcome to Exploring ETFs. Today we are talking about video gaming ETFs. And you all know that due to the health crisis, coronavirus pandemic, all sporting events have been cancelled. So as a result, many consumers who loved watching football, hockey, and other sports in stadiums are now entertaining themselves by watching video games or watching esports online. And while these video gaming stocks and ETFs, they got a big boost from the shutdowns, but they were actually doing well even before the shutdowns. And over the past some few years, this trend has been rising. More people are playing video games, particularly younger people and in emerging markets. So that is why these stocks had been doing well even before the shutdowns. And these ETFs were gaining popularity. Uh, and it is quite possible that these preferences may make a permanent shift even after the crisis is over. Because once you start playing video games, maybe you get used to it, you start liking them. And it is very much possible that these gamers are going to stay and they continue playing these games even when we return to normal. But then probably these ETFs will not see the kind of boost that coronavirus gave them, because once physical sports return, some of the fans may return to physical sports. Some major sporting leagues have already announced some games without fans, and if the world returns to normal in about a year from now, if we have very effective vaccines against the virus, then probably these ETFs will not see the kind of the boost that they saw recently, but that's more than a year away from now. So we will take a look at 4 ETFs that provide exposure to this space, and all these 4 are very different in their approaches and holdings. So their performance is also quite different. So let's take a look at them. So the first one we will talk about is by VanEck. It's called VanEck Vectors Video Gaming and Esports ETF with the ticker symbol ESPO. Very easy to remember. And it tries to provide, kind of pure play exposure to video gaming and esports, because it holds companies that derive more than 50% of their exposure from these activities. It charges 55 basis points, and it is most popular in the space with 240 million in assets. But as you see, even the most popular is not really popular, not very big compared to many other broad market ETFs. Now, to learn more about this ETF, you can go to the code page on Zacks.com. And from there, you can go to the external home page, VanEck Vectors web page for this ETF, and learn about more details and top holdings. You will see NVIDIA, which is one of the best performing stocks this year. And C Limited, this has done very well this year. It's a Singapore-based company which provides internet and mobile platforms for gaming. And then AMD has also done very well. These are among the top holdings in the ETF. Now, all these ETFs have a lot of global exposure because gaming and esports is rising. The popularity is rising very fast in many other countries: Japan, China, Taiwan, South Korea. So that is why they have a lot of international exposure. US is about 37% of the portfolio, and rest is international. Now, the second one that we will talk about is by GlobalX. It's called GlobalX Video Games and Esports ETF with an excellent ticker symbol HERO. This also tries to provide pure play exposure, more than 50% of the revenue. It charges 50 basis points, relatively newer, and has 90 million in assets. And again, to take a look, you can go to the code page on Zacks.com. From there, you can go to the external home page uh, and look at top holdings and other details. So you will see similar holdings in this ETF too, which because this also tries to provide that pure play exposure. You will see C, which I talked about a little bit earlier, NVIDIA, NetEase, and Electronic Arts, Take-Two Interactive, those game makers in the portfolio. You can also go to the fact sheet to take a look at the global exposure. This has about 30% exposure to the US, and rest is international: Japan, China, South Korea, Singapore, and other countries. Now, the third one we are highlighting today is by ETFMG. This recently changed its name to VidPush ETFMG, Video Game Tech ETF. It's got a ticker symbol Gamer, and this is actually oldest in the space. It is also the most expensive with 75 basis points expense ratio, and has AUM of about 91 million. Now, this provides more broad exposure to gaming. It holds more both pure play and non-pure play companies, which are either game developers, console or chip makers, or game retailers. Now, again, to take a look at this ETF, go to the quote page on Zacks.com. You can read our articles, etc. I have also done podcasts on all these ETFs. You can go to the external homepage, ETFMG's web page for this ETF, and you will see Bilibili, Embracer. I don't know much about these companies, but I know about Zynga. You will also see Apple, Google, and Microsoft in the portfolio, though the weight is rather small. In fact, if you go to holdings on tab on Zacks.com, you can see those holdings because they have some revenues from gaming, but they are not exactly pure play gaming companies because they have so many other revenue streams. But that's what I was telling you earlier, that it holds a lot of non-pure play gaming companies as well. So that's why you will see Microsoft, Apple, and Google in the portfolio. Now, the last one we are talking about is the newest in the space, and this focuses more on esports. It's the Roundhill Bitcraft Esports and Digital Entertainment ETF, ticker symbol Excellent Nerd. It holds esports and other digital entertainment companies. As the name suggests, follows a modified equal weighting scheme. As of now, it is the cheapest in the space with 25 basis points in expense ratio, but its expense ratio may go up after July. That's just keep that in mind and take a look. It's also rather small in this in terms of assets as of now. Has about 17 million in assets so far. Has gathered about 17 million so far. And again, to look at the details, you can go to the quote page. I did a podcast recently on the ETF. You can also go to the external homepage and look at other details and holdings. C, that we discussed earlier, Turtle Beach, Nexon, Modern Times, Activision Blizzard. These are among the top holdings in the portfolio. And this actually has the largest international exposure of the four. It has about, let me see if I can find that. Okay, it's not. Yeah, it's here. So about 21% exposure to the US, and rest is international. China has a large. China gets a large weight in the portfolio, too. And as I mentioned, you can look at the top holdings and other details. Now, because of these differences in their approach in selecting and weighting their holdings, The performance is also very different, but all four of them have beaten the S&P 500 index this year. So this is the year-to-date performance chart. You will see that VanEck and Global X product, they are up more than 25% this year. The one by ETFMG and Roundhill, they're up between 15 and 20% this year, whereas the S&P 500 index is now just about flat for the year. Thanks for watching, and I'll see you next week.